Well, thanks for tuning in to India Market Close, and you wouldn't call it a difficult day of trade, but a day where we haven't gone anywhere per se, and literally not gone anywhere, because it's not like the market has had sharp gyrations and has come back to being flat. It's largely been flat throughout the trading day. FMCG has done slightly better. PSU stocks have come back a little bit, but aside of that, not too much. Look at this. I mean, this has really done well. PSEs have done well, but otherwise the market has been a bit lackluster. Banks have been 1/3% lower. Not like IT's come and picked up the mantle in the session today either. So a thanda kind of a day. Bring up the heat map and show you what's moved on the large cap end of the market before Tamanna and Sabina talk about the broader end of the spectrum. What's lost out? Let's establish that first. So Titan clearly started off the day as the top loser and stayed that way, but the pharma names, which were doing very well Thursday and Friday, have come in for a bit of profit booking. Divi's is an example, but I think Granules, Laurus and the likes also have come off. There is weakness in BPCL, there's weakness in some of the steel and infra names. So the Adani Twins, JSW Steel have all corrected in the session today. And a lot of red, more red than green, but oil upstream has done well. Reliance is doing well, ONGC is up another 4%, and a defensive bent because of FMCG and insurance right there visible on the screen. So yes, markets holding out, Tamanna, but with very few heavyweights participating. It's just that kind of a day today.
Yeah, I would reckon that it's blocks of activity that you're seeing more than anything else. And maybe broader markets slightly better. Let's pull up what's happening in the broader markets as well. Well, no, not anymore. The Nifty Midcap 150, nearly 0.5% down, and flat to negative on the small cap 250 as well. But specific stocks that are in focus, and one that I must talk about is RVNL. In fact, the entire rail pack is a buzz, but RVNL specifically, take a look at IRCON, IRFC. These have been outliers in an otherwise thanda day, as Niraj put it. I'm talking about IRFC, not RIL, so we can just move that. But RVNL and IRCON definitely doing well. There could be a number of reasons. One is, of course, pre-budget that excitement is coming in. We now have a date. Also remember, a few days ago, BlackRock took a stake in Titagarh, and since then, railway stocks are in focus. FMCG also as well. You saw that in the Nifty pack, but let's pull up a Marico, a Dabur, an Adani Wilmar. All of these in the back of robust or better than expected business updates, I would say, are doing well. Marico stand out over there. So that's one to mark. Titan, on the other hand, had a pretty disappointing sort of a business update, and that's reflecting there, and you saw that in the Nifty as well. So this is the long and short. The other space that is showing some action, I would say, is the PSU pack overall, because that index is also up. And Samina, I reckon that's really a defensive / budget play coming into focus today.
Yeah, I think then that's been pretty much been the theme, right? You talked about how railway stocks have been doing so well. Just a few days ago, you had the railway minister, Ashwini Vaishnav's disclosure of plans of 2,500 new general passenger coaches and 10,000 additional coaches. He also announced production of 50 new Atmanirbhar trains. Those are the key factors, what is fueling the railway rally in today's day of trade. Remember, analysts do believe that significant announcements could be expected with regard to railway infrastructure, and that's helping stocks in today's day of trade. RVNL is up 30% in the last 2 days. IRFC, RailTel are amongst the other top gainers. 197 communication has popped out of nowhere, actually, in the second half of trade, eking a gain of about 8.5% to 9%. Fertilizers are not doing too badly. That, again, like Tamanna says, is budget plays. So FACT, RCF, GMDC are some of the other ones that are doing quite well in today's day of trade. What they're seeing, and Metro Brands, again, not sure what's happening here, but the stock has been doing quite well from the get-go this morning, continues to hold on to its gains, even though it's given up just a little bit as we see it. Well, apart from that, there are a few names that are seeing profit-taking, talking about the theme that is budget. Defensive names today, for a change, are seeing a little bit of profit-taking that's emerging. So pull up how Garden Reach is doing. It's down, but quite sharply in terms of trade. HAL and BDL are holding up. Garden Reach is down 3.5%. Cochin Shipyard and Mazgaon Docks will be following suit. Both those counters seeing a cut of 1.5% to 2% each. On the losing side, a few more names that are denting the sentiment. So Elcon Engineering is down 6.5%. Pull up Radico Khaitan, there's about a 4% cut there. Allied Blenders, which is a listing from last week, in that same breath, let's say if alcohol companies are doing okay, the stock is trading down with a 1.5% cut. PSU banks, mid-cap banks are looking weak. So from your City Union Bank to some of the private sector mid-cap banks are all seeing some profit taking in today's day of trade. Pharma is also having a quiet sort of morning, and so is IT. So very few gainers, and it seems like the trend today seems more downward than upward. Vijay Chopra and Himen Kapadia now join in with their top strategies and trades for the day. Himen, I'll start with you now. The Nifty is showing signs of tiredness at higher levels, but sector rotation is what's keeping it up and about. At 24,300 with a 15-point cut on the index, would you be tempted to initiate a fresh long on the Nifty for the week or maybe even for the July series?
A very good afternoon to you, Samina. Thank you for having me on the show. Sorry, it's a pleasure. I would prefer to stay away for the time being, Samina. The Nifty is a bit overbought. It is a bit stressed. It's a bit tired. Now, that doesn't take anything away from the fact that we staged a fantastic recovery from 21 to 21 or something on 4th of June, and we are a month into it. If we break 24,200 in the near term, I think, yes, there could be some pressure coming in and we'd see some sort of a corrections slipping in. The bank Nifty has been distorted simply and only because of HDFC Bank, Samina. Because HDFC Bank gave a 3.5-year breakout, which didn't complete because the weekly closing didn't come in and it fizzled out and it sank the bank Nifty along with it. And it is also proving to be a drag on the Nifty itself. So I guess it would be better for this to play out. Reliance, on the other hand, is a savior for the Nifty. So it's HDFC Bank which is pulling it down, Reliance is pulling it up. So I would say avoid the indices for the time being. 52,000 for the bank Nifty I feel is important. And extreme short term 24,200. Otherwise, the level I would look for as far as the Nifty is concerned is around 23,985. So these levels hold. I think sectors will play musical chairs, Samina. And I think one should be more script specific for the time being.
Himen, good afternoon. Tamanna here. Talking about specific scripts, what are the ones that are on top of mind today for you?
Hi, Tamanna. I'll start with Kotak Bank. Many of the banks have done well. Kotak is not far behind HDFC in the sense it's been a lag for almost 3 years. It's now on the cusp of doing something positive. The level to watch is 1851,850. We haven't closed above this level since the weekend at 12 Jan. So I believe it's training at the least, so to speak, should take out this level and move up. So I have a buy on Kotak Bank at 1848. Stop loss 1823, target of 1898 is a small stop loss, small target. I think we should be comfortably heading toward 1950 and 2000, but that would take some time. And the other stock is SBI Cards, Tamanna. We've had a correction. We've had a deep decline from 920 to 650 almost. Stage a recovery, consolidated, and then now setting the stage for the next round of its up move. Above the 55-day moving average oscillators have given a crossover buy. Even the weekly chart seems to indicate we formed a medium-term bottom. So it's ticking all boxes on the technical checklist, Tamanna. So a buy on SBI Cards at 735, stop loss 715, target 775. And at the risk of sounding overly optimistic, maybe and just about maybe it might have exhausted a 3-year down move. So fingers crossed, looks good, at least on the medium term. Need some time confirmation to confirm this on the longer term charts. Tamanna.
Vijay Chopra also with us today. Vijay, very good afternoon to you. I just wanted to get your take. Let's start with what's happening with FMCG, and then we have a report from my colleague Mahima as well on the back of the business updates. Are you seeing this more as a defensive play today, or is there enough in those business updates to warrant this optimism?
Well, I think that whenever the markets feel that they're in a tizzy and people think that there are no more ideas to go, so they look for defensives. Money looks for defensive arenas to park. I think that that's the reason why we are seeing an ITC or a Marico or a Dabur, working today. And I think it rightly so, because this sector hasn't moved much. We are sitting, on an ongoing monsoon, which is troubling people in Bombay. I'm sure that, it must be quite tough for you guys to reach office as well. So the monsoon has nicely covered the entire country, and as per the IMD reports, sans climate, monsoons are going to be normal. So whenever we see normal monsoons, it's a good news for ITC play for FMCG players. So players like ITC or others, as I've mentioned, they're going to do good in at least this quarter. So I think that a lot of money would chase good quality FMCG companies, and all of these companies are large ones. And so I'm sure that the sales, especially the rural sales, will pick up very soon, and we are going to see a lot of good news around the FMCG companies. So I'm fairly bullish on FMCG pack. And we are also hearing that the finance minister is planning to leave more money in the hands of the salaried class or the people, by increasing the the standard deduction and other things. So that would also propel FMCG sales. So whatever investable surplus is there in the hands of people, so they would invest in their lifestyle, and they would buy more and more FMCG products, or maybe entry level cars, or maybe two wheelers. So there's a lot of potential for these sectors. So monsoon brings a lot of cheer, and I think the budget should be pocket friendly for the middle class as well.
Well, like Vijay said, the monsoon onset is giving enough and more to cheer. And of course, it is the FMCG stocks that are doing well on back of that, and those business updates. Well, Mahima is standing by to take us through what those updates look like for the FMCG and retail sector. Mahima, it's over to you.
Let's Veena. So I'll start with Marico. Well, strong Q1 FY25 update and stronger management commentary, honestly. Sequential uptick in domestic volumes is something that Marico has observed. They're saying that international business has continued to deliver a double-digit constant currency growth. Now, in terms of consolidated revenue, they're expecting that the growth trend upwards in FY25 is something that they are sure of. In terms of gross margin, it will expand on a year-on-year basis, and in terms of its product-wise performance, where Parachute volumes grew low single-digit, however, Saffola edible oil volumes grew mid-single-digit. Now, in terms of Dabur India, healthy Q1 FY24 business update. Something that's positive in the commentary is that rural growth is picking up for Dabur India, and so as well for all the FMCG companies. It saw a sequential improvement in demand trends with rural growth upticking. It expects improvement to accelerate in the coming months, and consolidated revenue is expected to register mid to high single-digit growth. In terms of India business, is expected to record mid-single-digit volume growth, and international business is expected to post strong growth in terms of constant currency. In terms of gross margin, they are likely to witness some expansion, and operating profits are expected to grow marginally ahead of the revenues, is what the management had to say in their Q1 FY25 business update. And lastly, for Adani Wilmar, where healthy volume growth is something that is favorable for Adani Wilmar. They posted a volume growth of 13% YOY. Their alternate channels, including e-commerce, quick commerce, and MT, maintained and saw a growth of 19% YOY. And branded export volumes grew by 36%. For food and FMCG, volumes was around 23%, and industry and essentials volume declined by around 8%. So this is the overall view of the FMCG Q1 FY25 business update, and definitely monsoons and rural growth uptick is something that will aid these FMCG companies.
Most certainly they will. Mahima, thanks a lot for getting us those updates as well. By the way, just before we take that break, some stocks have really surged in trade. Stanley Lifestyles should pull that one up. It's got this huge uptick, if I'm not wrong, in the last few minutes of trade. Look at that. And the volumes are not too bad, I must say. So that is one stock that caught my eye, Stanley Lifestyles. And then PNC Infra, a bit of a bump up on that stock as well. So that's something you want to watch. GAIL, it was a call on Friday, and I think Gas Authority of India too has got a bit of a spike there. Look at that spike, 3% higher 229 and counting. So some stocks flying around. We take a break, come back, continue a conversation with our experts.
Welcome back. You're watching India Market Close. It's turning out to be quite a day. While the index itself may not be getting up to too much in terms of action, it is railway, fertilizers that seem to be buzzing in trade. What's also caught up is the likes of REC. If we can pull that one up, the stock for quite some time was on the sell side, but this afternoon the traction seems to be returning to the likes of an REC, Irida, both those counters looking quite good as we see it. Defense is seeing some profit taking, so stocks like Paras Defense are trading lower. ITD Cementation is down 7%. Exicom Tele is down 7%. Adding to that is Shakti Pumps down 5% as well. So all in all, it's a mixed day of trade. But Himain, I want to talk to you about some of these railway names, and RVNL saw a big gap up in early trade, and it's only built on those gains in the last few hours as well. Between Friday and today, I think the counter is up 25-30%. At these levels, does it seem like there is more strength? I mean, it's spent quite some time consolidating, so I'd imagine now that the upward journey has begun, it still looks attractive, does it?
Yes and no, Savina. Attractive, yes. Further upside, yes. But like you said, in the last 2 days, the move has been massive. So I would be slightly reticent about recommending a fresh buy. But if you have a position, like you said, we've consolidated a bit also, and then we've carried on from there. And we remain safely ensconced in a longer term uptrend for almost the past 2 years. And that picture still hasn't changed. So we spoke about RVNL, but something like an IRFC seems slightly safer technically. Why? Because we spent 6 months consolidating, Samina, and just today we are breaking out and posting a fresh all-time high. So I would say that the stop loss, what I would want to say that the risk-reward ratio would be more in favor, assuming we keep a stop loss. We need to keep a stop loss. So IRFC would be a better bet than RVNL if you were to take a fresh position.
All right, talking more about, RVNL and which is really buzzing in trade now, about 17% up. Anushi joins us with more. Anushi, any reason why we're seeing these kind of volumes, or is it a continuation of excitement ahead of the budget?
Tamanna, I think you picked the last line as accurately as possible. Now, if you just look at the kind of performance RVNL has displayed, 17% gains, as you've seen, the intraday high of about that. Volumes also buzzing at about 4 times its 30-day average. Now, just to get a perspective on how this upcoming budget has led to this kind of performance that we are seeing in the last 5 days itself, we've seen the stock going up over about 37% in trade. Again, if you look at the kind of stock performance also, 1 year the stock has been a multi-bagger for sure, 361% of gains, while in 6 months it has seen about 209% of gains. But again, the last 5 days that we are seeing, this is also a lot to do with the upcoming budget and how they're going to allocate more towards the Indian Railways side. But again, apart from that, if you look at the performance side of the business, FY24 we saw about an 8% revenue growth, while its margins more or less remain in the 6% range. Net profit about 17.3% growth. Order book, they have a strong trajectory going forward. As of March 24, their order book was about 85,000 crore compared to 56,000 crore last year. This is on the back of the higher mix of the competitive bid projects it is participating in. So if you look at March 24 total 286 bids that the company participated in which its success ratio is over 20%. But going forward now, looking at FY25, it's anticipating a top line growth of about 5 to 7%, while they're seeing the order book going up at 1 lakh crore rupees in compared to about 86,000 crore which they saw in FY24. Along with this, now the focus shifts toward the bottom line growth. Now they're seeing about a 10 to 15% growth going forward in FY25, and again this is on the back of increasing exports for the business, which in general have higher margin expectations. So this is the overall gist and the picture that we've seen in RVNL and what we can anticipate for with the upcoming budget for the company going forward.
What a move, Anushi. Thanks for that. What a move. Tamanna picked it right. Anushi enumerating why these stocks would have rallied. 17.5% for RVNL is quite stunning, really, in that sense. So watch out for the railway stocks for sure in the session today. Vijay, they are split into 2 or 3 categories, though. If you had to, would you pick a railway stock? And if so, would it be a coach manufacturer? Would it be a service provider? Would it be something else?
Well, Niraj, I think that the kind of run-up we've seen in the entire railway pack, I would be wary of, going ahead and buying stuff. Although I agree with him in that, valuation-wise, IRFC looks much better. But I think that, we should wait for some kind of a pause. We saw this kind of a run-up a few months back as well. Then the stocks corrected. Even then, I was saying that, I gave a word of caution that, one should start booking profits. One stock which I see hasn't moved much is IRCTC. I think that there is still steam there. IRCTC is kind of a monopoly player in the entire railway pack. And I think that it has the potential of going up to 1150, 1200 as well. So this is one stock which hasn't moved much. So I would say that, be in low beta. Last week also, I mentioned that, you should shun high beta and try and be in the beta stocks which haven't moved much, because once these stocks start coming down, then the new investors especially would be in panic. Although all these companies have proved to be multi-baggers, and the kind of budget outlay which we are expecting in railways, these companies should do very, very well over a period of time. Now, there's a time, we are in the time as this in India, where the metro rail coaches are being exported to countries like Australia, which are developed countries. So who knows, like defense, we might do some great job in railways as well, and then we might be manufacturers or suppliers of railway equipment to a lot of countries. So I'm fairly bullish on this entire theme, and the Honorable Minister Ashwini Vaishnav is doing a reasonably good job. They have a vision in place. The good thing is that earlier vision was not there, department-wise and company-wise vision. Now they have a vision in place. They have wonderful order book, and now they're able to showcase and market it as well. So I would say that keep booking profits and wait for the right opportune time to get into these railway stocks. And as I mentioned about the defense play also, you're seeing some kind of a profit booking. Last week I was mentioning that one should start booking profits. So these two sectors are fantastic sectors, fabulous sectors to be in. But yes, wait for some time, and then once the correction happens, then probably you can get again into these stocks.
Well, but it is a PSU backed rally, because if you look at the top 4 gainers, it's PSUs, and then there is a Paytm, of course, which is up 8% out of the blue today. In fact, speaking of out of the blue names, guys, I don't know if you guys have been going out to casinos a lot, because Delta Corp, out of the blue, is up about 7% in trade today. I like how you asked
if we've been going and hence they're up. I like that connection.
Since in the last 1 month, I've been on air all the 30 days, but periodically, my co-anchors have been traveling, so I'm just checking.
You still have plenty of time to go to casinos in any case. But no, I don't know. That's a strange counter which keeps popping up on the hopes of some GST magic happening. I don't see that happening anytime soon. But a lot more to talk about. We're going to take a very short break, and then let's also talk a bit more about why you have this PSU, fertilizer, rail, defense sort of buzz. The sort of budget frenzy has also increased. And as we go into the break, let's play out for you what Dixon Tech's CFO told us. Saurabh Gupta spoke to us today and talked about his expectations from the budget.
Like any industry, we've also given a wish list to the finance minister. And there have been a lot of articles, media news lately. So we expect a couple of things. One, we expect that the reduced taxation rate of 15%, which was earlier applicable and later on it was last financial year or this financial year, it ended. We want the government to renew it for the manufacturing sector. So a reduced taxation of 15% should come in for the manufacturing companies. Second, I would say that a lot of PLIs have been there for the finished products. So we expect that the government might come out with another PLI specifically for electronic components, critical electronic components, because a large part of imports is still being done through of those electronic components. So we expect that the government will come out with a PLI for electronic components. So these are the two things which we expect, and among a lot of smaller things as well here.
welcome back. You're seeing a pretty placid kind of a market today, trending towards the downside. I mean, the Nifty and the Sensex now marginally in the green, but completely flat. The Bank Nifty still, in pain, about 0.5% down, even as we speak. So you are seeing that kind of situation where nothing much is moving, except for specific pockets, which are focused on the PSU pack, railways, FMCG. These, I would say, are the big three spaces where you're seeing action today, if at all. Agam now is joining us on the F&O cues. Agam, are you seeing these pockets also flaring up with a lot of interest building up?
Yeah, certainly. And, it's going to continue to be mostly these pockets over the next few days. But let's take a look at how things are, in fact, faring as far as the benchmarks are concerned. They're flat at the moment, and we've seen very little traction in futures for the Nifty, the Bank Nifty as well. The index itself is taking a cut around 0.5% down for the third straight trading session, and we're looking at some shorts building into the Bank Nifty futures. Moving on, as far as your option market is concerned, we have a further strengthening of the 24,500 mark as the one with a little bit more resistance, given the kind of traction that we're seeing around there in terms of calls, and of course on the lower end continue to see more traction around the 24,000 puts. But as far as stocks are concerned, that's where we're seeing a little bit more buying interest coming back to Chambal Fertilizers. But besides that, we have a lot of weakness in Titan, Divi's Laboratories, as well as, perhaps a little bit in Balakrishna Industries, which is in fact all of them is looking at shorts building in. And among other counters which are seeing unwinding, we have about a short covering for Ipca Labs, Hindustan Copper, as well as Nalco. All in all, it's a mixed market. And it's been a quiet day for the benchmark indices. And perhaps at the moment, a lot of analysts are suggesting consolidation. That's exactly what we are seeing there.
Thanks for that, Agam. It is a flat day of trade, but we aren't surprised, right? It was expected to look like that. The good thing is we haven't sold off, and I think that's what we should be taking heart from. Bank Nifty, if I can quickly just pull out the Bank Nifty index and see how trade is playing out there. It's quiet, 0.5% cut on Bank Nifty. Friday as well, the sector was seeing some amount of profit taking that was emerging. A whole bunch of banks are seeing weakness as well. Himain, are you using today's weakness as an opportunity to go long?
No, I'd wait a bit, Tamanna, because technically we're in a range between 53,400, 52,000. And HDFC Bank has single-handedly wrecked the technical picture completely. So if it continues to sink like it does, I'm not sure why it's done that. I think we could be seeing further pain. I'm not saying there's going to be a big downside, but yeah, if 52,000 breaks, we could slip deeper into it. So on technical parameter, there's absolutely no signal to buy the Bank Nifty. On the daily chart, if you're looking at the intraday point of view, Tamanna, maybe it's getting a bit oversold, and if 52 holds, you take a counter trade. But current, I think it's in no man's land. It's neither a sell, neither a buy, Tamanna.
So is there anything, Himain, that's looking attractive to you from a July series time horizon? Actually, maybe not. And more so from the budget timeline, right? So from now to the 23rd of July, is there any stock that is looking attractive on the charts?
Well, frankly speaking, something like a green energy or a defense or a railway, but I take my own statement back, Tamanna. Defense and railway are anything but defense. Defense is offensive, railway is running like a jet. So what I mean to say is that hardly anything left, at least from my point of view, technically, on the defense and railway pack to warrant a fresh move or take a stand maybe till the budget. Even fertilizer stocks have done well, Tamanna. A little bit is left. I think you also, I think Niraj mentioned, yes, I think FMCG, generally considered defensive, is showing some sparks of life. ITC is looking positive. I know this is not a trade till the budget or for the budget, but I think FMCG can turn out to be a dark horse. The index is setting the stage for a breakout, and many of the stocks led by Hindustan Unilever seem technically positive, not only in the short term, but medium term. So not exactly budget, Tamanna, but the sector and the index itself is showing technical promise, Tamanna.
Okay, so among these, when you're talking about FMCG, any in the mid-level ones that you like, Himena, and are you sticking to just FMCG, or you like some of the consumption play as well? I mean, Titan and Nykaa both sort of disappointed with their updates, but on the charts, is there anything here you would touch? If I talk about a Titan, then look at a Kalyan or a PC Jewelers today. Both have seen a lot of buzz, and we'll pull up those counters as well. Titan, of course, down about 4%, but if I look at Kalyan, I look at PC, Kalyan dropping off the highs of the day. Then, PC on a 10% circuit. You might see some action here. Any of these areas that you would pick?
Titan has entered an intermediate correction, Savina. So I think I would leave it alone, let it find its own bottom. As far as Kalyan Jewellers is concerned, stands out, distinct strength. The Jack in the Box is PC Jeweler. Moves sometimes in circuits, doesn't exactly abide by technical parameters, but it's technically cheapest. Because why I'm saying cheap, we have a clearly identifiable stop loss and a target in place, and we've been consolidating for almost 6 months, Samina. So not much to lose. It might be slightly risky, but this is the one. And yeah, going back to the FMCG theme, Samina, normally Hindustan Unilever leads the pack. Well, that's what it has done. But we walked into a roadblock at around 25.90. So I would say Dabur looks, ITC looks slow and steady. We've been corrected for almost 6 months now. But Dabur is the one which is looking very interesting, Samina, because, Tamanna, we spent what? 3 years. 3 years between 490 on the downside, 610 on the upside. We are in July and we sustained above 610. So frankly speaking, I know HDFC Bank did a flip-flop, but after 3 years, if a stock gives a breakout on the longer-term charts or is breaking out, I think Dabur looks to be the one which catches my eye. The all-time high 660, Tamanna, posted somewhere in September 21. I believe that this whole build-up is the first leg of its move to 660. And once again, sounding a bit optimistic, 800 after that.
Up to 800 for Dabur. Wow, that's interesting for a sector that has been down and out. Vijay, I believe you also want to come in on the jewelry story. We talked about Titan, Kalyan and PC.
Well, I just wanted to inform that, there was one news I read day before that, some resolution has happened in PC Jewelers. So this company was, having a huge debt primarily from SBI and PNB, which were the two biggest lenders. So this company has been into doldrums for quite some time. But, the promoters are doing OTS and for SBI, they've already done. The news for PNB came day before. So I think the reason for it being on an upper circuit is primarily the resolution which is happening with the banks, which is overall, I think, a good news for any company which was into problems. But I think that they actually need to show a lot of metal on the balance sheet because, the balance sheet has been bleeding. So until and unless any company shows profits, I would be wary of, buying that. But again, it's good news that a stock which used to trade at somewhere around 600 few years back was at almost 20-25 rupees, and it has doubled from there. So the resolution is the reason why PC is up. No other major fundamental or technical reason.
So that's an important clarification, Vijay. And you could see some kind of spikes over there, but fundamentally, I mean, if a Titan is struggling, then I don't know what's really moving for some of the other players. But another stock that has been in focus, a story that has been in focus is Bajaj Auto. Now, not that the stock has done much today, in fact, about 1% down, but last week on Friday, they launched the world's first CNG bike, actually. My colleague Harsh and Puneet are joining us for a bull and bear case on Bajaj Auto. Now, this is because there are a lot of views on whether this is a breakthrough or maybe too much of a risk. What are those different views playing out, guys?
Well, thanks for that. So initially, this is like the world's first CNG motorcycle, as you rightly said. It has quite settled the auto space abuzz in this particular segment, and we've known that, you know, for a while that Bajaj has been absent from the 100 to the 110cc space. Entry level, we know what the comments have been of the management, that they are not very positive on the margin outlook of this space. But with this particular launch, that is surely set to change. When you look at the product specification that has come in for this particular product, it has been launched and the management has guided for a 10,000 unit sale per month. This will be eventually ramped up to 30,000 units, and this will be incremental to sales volume of Bajaj. Currently, they obviously sell a lot of bikes in India, roughly 35 to 40 lakhs into a year, but being largely absent in this particular category of the 100 to 125cc segment. They had the Pulsar launch a couple of years ago, but now with this, an entry-level proposition, the first such in almost a decade or two, which the last could, you know, be traced back to Discover only, could be one of the major positives. And I think that's, Harsh, that's one of the main things that they are trying to address, this particular absence in this particular space.
No, take your point, but Puneet, product acceptance is going to hold the key here, because while it's a 125cc pitch, likely given the CNG engine, you know, it could work more like a 110cc kind of bike. So while they're not present in that space, and the argument may be valid, the fact that will the product actually get accepted is really going to be where the challenge lies. And of course, thereafter, delivery delays could also slow down the ramping up.
Well, that's definitely one of the cases. And when we move on to look at the second key positive that could be from this particular launch, we see that, you know, the cost break even is very harsh in just 2 to 3 years, which will be a key positive for someone buying the motorcycle. Is telling them to that 2 to 3 years will be one of the key positives. One of the claims that they have been making is 50% lower cost than a petrol engine. Now, do know that this also has a CNG 2 kg engine as well as a 2-liter petrol engine. When full, it's going to give them a range of roughly 330 kilometers, and the cost of that average would be around rupees 450 odd. When you compare that to someone like a Splendor, they are offering roughly 60 kmpl mileage currently, and the cost of that ownership would come out to around 900 rupees, and that's what the company has been claiming, that with the dual benefit of CNG as well as petrol, that could be one of the key positives for someone who's buying this particular product.
Is that the right metric to track, Puneet? You track autos. Largely, the way I would look at it is you should compare it to 100 to 110cc kind of bike, where the break-even is going to roughly 4 to 4.5 years, in fact. So if you peg it to a 125cc in terms of costing, maybe 2.5 years, but otherwise it's actually 4.5 years, the cost break-even. And maybe that's the better way to look at it, and therefore a 15 to 30% premium roughly to the 110 to 125cc bikes looks quite expensive.
Well, could be one of the key things to look out for. And now, initially, when we look at how this space has evolved, essentially, the 110 to 125cc has changed a lot over the last few years. We have seen that Nuvama has come out with a note as well. They are claiming roughly 6 to 7 lakh bikes are in demand in this particular space. And eventually, we feel that the consumers would move into this segment as the base level, and the 100cc segment could be, you know, obsolete, so as to say, because the newer consumer is going for something like a Pulsar 125 or the TVS Raider for that matter. This product could be the base variant going forward for someone who's looking to buy an alternate to something like a Splendor, where they are claiming it will be 50% cheaper. Also, a newer consumer which Bajaj hasn't, you know, tapped before in this particular space.
So while that argument stands, traditionally it has always been a viewpoint as well as basis experience. You've seen that the customer stickiness in the 100 to 110cc kind of segment is very, very strong. Therefore, to pull people away from that segment, and that's the segment which they are largely catering to. So the 100 to 110cc kind of segment is going to be very tough to pull away people. That's been the takeaway, the key takeaway when it comes to past precedents.
Now, when you look at the kind of markets that they will be addressing, apart from, you know, the strong domestic market that Bajaj has catered to over the last few years, this could also potentially be an export play. When you look at the key markets such as Egypt, Tanzania, Colombia, as well as Peru, which are strong CNG sales markets, this could potentially be another pivot in the strong export sales that they have. Currently, roughly 45 to 50% of the sales for Bajaj is from the export market, and another product addressing the gaps in that portfolio as well will be one of the key beneficiaries, which could be potentially leading to higher sales as well.
So while Puneet, your argument stands that Bajaj does a lot of exports, my argument would largely be that this is a product which is for the Indian market, for the domestic consumer. So the focus should be on domestic first. If it does well domestically, I believe that they will still count it a success. And therefore, there's too much uncertainty with regard to export to suggest that they will do very well there. Of course, there could be a bit of a leg up there, but outside of that, I think it's catered for the domestic market.
I think finally, when we look at, just to put a cherry on top of this whole discussion, is the valuation picture. What's the current valuation it trades at? What could be the incremental revenue as well as EBITDA growth from this particular product launch? We see that Bajaj is largely around the 26 times price to earnings 2 years forward in FY26. Brokers have also been positive, and this is not yet taken into consideration the whole kind of effect of this particular product launch in the CNG space. When you compare it with someone like a TVS, it's trading much cheaper. TVS trades at roughly 35 times and also is not very present in the entry-level space. So this could be the next leg of growth. And we've seen that this morning, Jefferies has increased the target price as well, going at around 11,600. We've seen Nuvama come out with a target price of 12,000. So largely could be a play to have the two-wheeler space and, much, much better for the valuations as well.
Let me counter that straight off with UBS and Citi's notes, 6,200 to 6,500 being the target price there. So clearly they are finding these valuations expensive. You compare that to a Hero, it's trading at a 30% premium to Hero's valuations. And therefore, Bajaj Auto in that sense, better comparable would be Hero, I would feel, because Hero is the top two-wheeler maker in the country as well as in the world.
Well, definitely. So could be a potential benefit, could be the potential bear case, so as to say, but that's what we feel in this particular segment. Back to you.
Thank you, guys. That was the bull versus bear case in Bajaj Auto. But we're going into the last 10 minutes of trade, and as always, buy today, sell tomorrow trade calls also coming in from our guest. Himen, you want to give us what looks good? Any buy today, sell tomorrow, or sell today, buy tomorrow strategies for our viewers?
Well, frankly speaking, Samina, the sell todays haven't actually worked in this market for some time now. Very rarely have they. But yeah, there are a couple BTSTs, buy today, sell tomorrow. One is National Aluminium, NALCO, and the other one is Hindustan Copper. So either of them are looking good. Hindustan Copper has formed a rounding bottom. The oscillators are positive. Everything is hunky-dory. So we're at around 342. So one can buy at around 342 with a stop loss of 338 and a target of 350. Risk reward ratio 1:2, 4 rupees stop loss, 8 rupee target. Buy on Hindustan Copper BTS.
Vijay, we go into earnings with TCS reporting on the 12th of July. We've seen some buying in tech companies last week, but they've gone quiet again. Do you feel like tech could be a good space? And if yes, what stocks in the tech pack are you going long on ahead of earnings?
Well, Samina, I have been advocating tech since almost a few months now. And I was, crying out loud and, giving a buy call on TCS at about 35.90, 3600. Primarily because I think that it's a sector which cannot be out of picture for a long time. So I would say that, I still feel stocks like TCS, HCL Tech, Infosys, the top run companies in the Nifty IT, they should do well over a period of time. The dollar would support. And yes, the overhang of the underperformance of this industry is slowly waning off. So I think that they are finding their feet even with AI. They have done a lot of retrenchment. There is practically no bench strength. So their balance sheet should look better just because most of their expenses are related to salaries. About, I think, 50 to 60% of the entire the spending is on salaries. So the salaries, they've been able to cut. Expenses, they've been able to cut. There is no flab in the organization. So I think across IT sector, in the next few quarters, IT should do well. There should be a re-rating happening anytime soon.
Okay, another space which is in focus, and this data came out a short while ago, is in life insurance companies. The June life insurance data suggests an over 14% year-on-year jump in total premium growth. Harsh is breaking it down. Keep in mind, HDFC Life is buzzing today. The rest don't seem to be doing too well, but HDFC Life still about 2% up. Are HDFC Life numbers in specific terms better than expected, Harsh? And what about the overall picture?
Well, overall, in fact, you're looking at HDFC Life seems to be, in terms of total premium income, seems to be losing some market share. In fact, Tamanna, just 8% growth. But what I believe likely is just with regard to value that HDFC Life has done in terms of the performance which it ought to clock in Q1 FY25 and whether it can hold on to margins or not. But anyway, so HDFC Life, of course, in focus, but let's just break the numbers down a little bit more. In terms of where LIC has done, 14% growth is what LIC has done. So it's somewhere lost a slight bit of market share, but not too much, which isn't too bad. 13.6% versus the industry growth of 14.8%. Which ones have done well in terms of premium growth? You have SBI Life as well as Bajaj Alliance's numbers really standing out. 22% growth from both of those. Mind you, SBI Life with such a large SBI customer base, a clear winner in terms of distribution there. You also have Max Life, which is premium, has actually dipped 6% year over year. And you also have LIC, which is at 13.6% year on year growth. HDFC Life at 8.3% was at best tepid, probably the slowest of the lot in terms of life insurance numbers for the month of June.
Okay. So, all right, the life insurance pack, at least those numbers not looking too bad. Year on year, Vijay Chopra, anything interesting in this space you see, or any merit you see in HDFC Life's bump up?
Well, yes, I think that HDFC is one of the most respected companies. The reason is their claim settlement is one of the highest. If you go to the IRDA website, so HDFC would top the charts.
Okay, I think we're having a
reason because the life insurance is a long-term investment. People invest for 20 years, 30 years. So they need stability in the company as well. And that is definitely giving HDFC an edge over other companies. So my take is that HDFC Life can go up to 700. And so LIC is a long-term bet. So, if somebody wants to buy LIC, buy in a correction with a long-term perspective. Even now, I think it can give 100, 120 rupees run-up from here. My target is about 1150 for LIC.
LIC target is about 1150 on this one. Remember, insurance usually, is not something that traders enjoy too much because the movements are very slow on some of these counters. ICICI Prudential case in point has been stuck in the range for an extended period of time. Finally, there was some sort of movement on the counter last week, but it's back down about 1% as we see it on ICICI Pru. Railway stocks are going home with significant gains. Joining the party is fertilizer counters. You've got a big move coming in on RCF as well. Himain, just very quickly before we have to start winding down the show, anything in the tech that you're long on, or Reliance Industries, how does that one look? It was one of the key contributors to the big move last week. Can you hear me, Himain? I think you're on mute.
Oh, my bad. I'm sorry. Reliance is the easier one, Savina. 21-week breakout, 6-day consolidation has continued. So I believe Reliance has further upside. HCL Tech underperformer playing catch up in the tech. Yeah.
In all of this, I'm wondering if anyone is seeing merit in Paytm and what's happening there. Himain, any thoughts on a 197?
50% returns from here, Savina. Little doubt.
So, Himain, this is Tamanna here. I'm going to fine you every time you call me the wrong name.
I'm sorry. I'm extremely sorry. I'm extremely sure of Tamanna. But yeah, so Paytm 50% returns from here, Tamanna. Looks good. We've broken out above 440 after a long time, but it's not a very short-term call. But 50% from here.
No, 1 sec. This is a big one. I have to reiterate. You're saying Paytm will give 50% returns from here. So at 473, you're saying 50% more is there, but it's not a short-term call over the long term.
I would say 50% from 440. That's my breakout level. So 660 would be my 50% from 440, Tamanna. And yeah, I would say we are on 8th of July. So before 8th of July 2025, we will is a wrong word, the stock market. I expect it to be 660 plus. I mean,
we could. Wow, that's a big one. Vijay, I saw you putting your hand up there. Clearly, you have strong thoughts about this.
Yeah, I've had fairly strong thoughts on Paytm since its listing. The day it got listed, I stuck out my neck and said it is very, very, very overpriced, and so was it. The second point I want to make here is that the corporate governance part. If at all any company does some kind of a goof up there and gets caught up with the regulator, like opening several accounts on the same PAN, and that's what actually put RBI in the tizzy, and that's how a lot of regulatory action has happened in Paytm. So I think that the stock has the potential. For sure it does. Maybe it can double up or even triple from here. But again, I would like to iterate that we should very closely watch the corporate governance part of this company. As I'm really not comfortable with the same promoter. Maybe he does something again and tries to fool around with the regulator. So I'm not comfortable at all when the management is involved in certain activities which are related to corporate governance. So that's where my disconnect is. Although Paytm seemingly a business model is good, we are still waiting to see revenues and profitability to happen on the balance sheets. But yes, corporate governance is one thing which I would not spare a management from. So I'm very
Vijay, I get your point, but the fact is that this corporate governance question has been going on for a while, and Paytm has just moved up from there on. So the question right now we're addressing is not the corporate governance issue, but how the stock is performing. But point taken. Thank you so much, Vijay and Hemant, for speaking with us today. Let's just wind down where the markets are closing off. It's been a flat day of trade, sideways trade largely, and just about a minute and a half left. Let's just take a look at where the indices are faring, and no big movement at all. Now, if you're thinking that this is just the end of a very volatile day, that's not really the case. We should pull up the intraday chart as well and give you a sense of how the Nifty has performed all through the day before we get to the Bank Nifty, because it's pretty much been very range bound, and that's where you're seeing is as well. In fact, very close to the day's high right now as we close down. Bank Nifty continues to hurt for a second day, second trading session in a row, and the start of a new week also doesn't see too much respite for the Bank Nifty. This may continue because the first cut of business updates that we've been getting from the banks have not been too enthusing. So what has worked today? Let's just pull up the heat map as we close off before we get to the broader markets picture. And it's all about FMCG. Your ONGC is ruling the roost over there, but apart from that, look at it, an ITC, an HUL, a Nestle, all of them on the top row. Your tech companies revving up towards close of trade as well. Wipro about 1% up. Infi not doing too badly. Tata Consumer there also in the FMCG pack. So clear defensive play, I would argue, Samina, with Titan, of course, at the bottom of the barrel because of the business updates that we have seen. So it's all about business updates, and I think budget would be the other big factor, just like we said this morning, isn't it? And you saw that in a RVNL, you've seen that in fertilizer stocks and across the board.
Yes, it's defensive for the large cap, but it's aggressive for the broader markets, at least in today's day of trade. A quick check of how the broader markets have performed. And remember, the Nifty mid-cap started off with a massive gap up to what the benchmark was trading. It was up 0.5% in the first few minutes of trade, but as we see it and close out today's shop, it's actually going home with a cut on the Nifty mid-cap and small-cap index. So the equations change. We started the day with large caps underperforming, but we're closing the day with large caps outperforming the benchmark in trade. The mid-cap, small-cap, micro-cap index all going home with cuts of 0.3%. Very scattered trade. So you had smaller sectors, like Tamanna said, budget was a bit of a talking point today. So you had railway stocks do really well. RVNL has been very excited since the last week. They have had a joint venture with the Delhi Metro Association, and that's what, and since then, that announcement, that MOU has really helped the RVNL gain. The counter is up 30% between Friday and today. It's not going home at the day's high point, but still going home with double-digit gains in today's session. Along with RVNL, you had the other railway counters also do well. So the likes of an Ircon, Railtel, IRCTC, all gaining in today's trade. Fertilizer, smaller sector, but over the last many decades, we've seen that every time the budget date comes out, fertilizer stocks start moving up. And that's pretty much what the trade was on the street today as well. RCF, Deepak Fertilizers, Chambal, all are going home with gains on a day when the markets largely have had it quite down and out. Apart from that, you had ONGC that stood out. Big gain coming in on that one as well. You had smaller sector. Stanley is what we saw in today's day of trade, did quite well. So all in all, it was interesting, Tamanna. There's no trend emerging, but I guess budget could be one theme that the markets wanted to stick to today, but I don't think this is sustainable in that sense.
Not at all. It's a hunt actually for newer ideas, and I think business updates and the big day on Thursday when the results come up is going to be in focus. So Marico, Dabur, etc. have had a good day today, but does that sustain is going to be anybody's guess. Meanwhile, that's really all the time we have on India Market Close. So from Samina, me and the entire team that put it together, thank you so much for watching. We'll see you back on India Market Open tomorrow. Stay tuned.